Good evening, everyone. Welcome to tonight's webinar, Money with Intention. We are supposed to have more people joining us, but for the sake of time, I'm gonna get started. I'm recording it, and I'll share the recording as well as the other value pack that I've prepared at the end of the session. Well, probably tomorrow or in a few days' time. But I'm going to get started with the webinar. Welcome, and thank you so much for making time to attend this webinar today. It has already been postponed twice, and I would like to again apologize for last week's technical error. I kept trying to send the email with the Zoom link, and the emails were just not going through for some couple of hours. So people didn't receive the link via email, and they were not aware that the link is actually on the Quicket ticket that you receive via mail after checking out on Quicket. So again, I would like to apologize for that. But I will get started on tonight's session. Okay, my slides are not moving. You are all muted for the purpose of just making sure that the session does not get disrupted. If you would like to communicate anything that you want me to be aware of later in the session, you are more than welcome to drop it in the chat. Let me just make sure you can all hear me before I get started. Um, just drop me something in the chat if you can hear me. Loud and clear. Okay, perfect. Okay, I'm gonna go back to sharing. All right. My name is Siphesihle Mokoka. I am the founder of Small Entity Solutions. I'm an accountant and small business consultant. I hold a BCom accounting degree from the University of Johannesburg, and I also hold a postgraduate diploma in business administration from the Johannesburg Business School. It's also a UJ baby, the business school part of it. What you can expect tonight in tonight's session is we're going to tap into possibly why you're struggling financially in your business, how to set realistic financial goals, creating an actionable plan for yourself to be able to achieve your financial goals, as well as how you can reflect financially on a monthly basis to keep yourself on track. And some of the mistakes that you might be making that you need to be aware of, and other contributing factors to your financial struggles that you need to be aware of. And then at the end of it all, we will have our Q&A session where I will enable all of you to be able to unmute yourselves and be able to ask any questions you wish to ask. Let's get into why you could be struggling financially in your business. It could be that you do not have any revenue and profit goals. And by this, I mean, for the year, we are now in the month of March. If your financial year end is February, then this is the first month rather, of your new financial year, which means you should be setting goals for yourself in terms of the revenue and profit that you want to achieve at the end of your financial year. So it could be that this is something that you're not doing in your business, therefore you are not working towards something specific and you are just going with the flow. That can lead to disappointment later where you realize you actually didn't put in as much work as you wished to put in, or you did not work as hard as you needed to work to achieve what you had in your mind but you did not specify noting it down somewhere and just working towards it and keeping yourself in check. It could also be that you don't have any expense ceilings or limit. So I think this is something that a lot of small businesses struggle with, where you constantly see a need for something in your business and you spend money on those things, but you do not set limits for yourself. So you get stuck in a cycle of saying, I need a new keyboard, I need a new mouse, I need this software, I need that. And your expenses are piling up, but you're actually not reflecting to see whether all these expenses can wait or are genuinely urgent and necessary to get at that time. And your revenue is not matching up to how quickly your expenses are piling up as well. Another thing is no tax planning. So for people who are registered for VAT, you would be liable to pay VAT possibly every 2 months. It can be different, but every 2 months is the norm that people register for. So you find that when money comes into your account, then you are not planning accordingly to say, I'm going to have to pay over the VAT portion of this income to SARS at a later stage. So you're not planning accordingly and saving accordingly to make sure that the tax returns or the tax deadlines don't catch you by surprise and they don't inconvenience you in terms of your cash flow. Um, this is now one of the major struggles in small businesses, particularly. It's mixing personal and business finances. A lot of times when we start a business, we expect that the business is going to sustain us and help us cover some of our shortfalls in our personal finances or cover all our personal commitments, personal financial commitments, right? So we end up generating revenue all for the purpose of putting that revenue towards our personal expenses, and you realize that the business does not grow. So this is something that needs to be separated, and we'll look at it a bit later on how you can be more intentional about separating your personal and business finances. You could find that you also have limited visibility of real-time business performance. And what I mean by this is, as I said, sometimes this is the first month of a financial year for people whose financial year end is February, right? So you find that next year, February, you get to the end of your financial year, and this is something that not everyone does, but if you do compile if you do your bookkeeping or you compile your financial statements, then you get to see how the business performed throughout the year. And that is now at the end of the financial year. It's a whole year later, which means there's not much that you can do about your company's performance for the past 12 months. So ideally, you need a system or processes whereby you are able to see how your business is doing in real time, which means at the end of each month, you are able to say, how did I do last month? What can I do better in the coming month to correct some of the mistakes that I did last month? So you need real-time visibility of your business performance to see how you're doing so that you can correct certain things as you go, you can improve certain things as you go, and you can know what works for your business so that those systems and processes are things that you don't let go of because they're actually working good for your business. Lastly, emotional or psychological reasons. So this is another thing that I'll touch on a bit towards the very end of the session, but sometimes the reason we are struggling in our businesses has to do a lot with our emotions and other psychological reasons. And if you are not aware of these things, they can keep you stuck in a cycle of not getting your business right and your business not progressing. But as I mentioned, I'll touch more on this at the end. Let's get into how you can set some realistic financial goals for your business. The three key things that you need to define is your revenue target, your profit target, and your owner's salary target. Now, remember when I said I'm going to touch more on your owner's salary. The reason this is one of the key things that you need to define is going back to what I said, that sometimes we need our business to be our main support in our personal finances or to cover a shortfall that is happening in our personal finances. Therefore, when you set your targets, this is something that you need to consider. You need to consider the fact that is your business your main focus, as in you don't have a salary? If that's the case, then you need to consider your owner's salary target. If you have a salary outside of your business that you then you need to take into account whether your salary is able to sustain you without your business coming in and dipping in here and there on some of your expenses, right? You need to know at the end of the financial year for the next 12 months, how much revenue do I want to achieve? In whatever business that you're doing, whatever you're selling, whatever service that you're providing, how much revenue do you wish to achieve? This is now the goal that you're setting for yourself. You also need to set the profit to say a business does have revenue. Revenue is the income that you're generating, right? And then a business also has expenses. After all those expenses are said and done, how much profit do you want to be left with at the end of the financial year? What is your target? You need to define that. And then you need to define your owner's salary. And this is driven by how much you need from the business to go towards your personal expenses to sustain yourself without you needing to dip into the business. Once you've set those goals, we reverse engineer your goals. We break down into smaller goals, or rather monthly goals that you are now going to work towards each and every month. So we say, what is the monthly revenue goal that you need to achieve? So let's say your annual goal for your revenue, your income is 120,000. Then we divide that by 12 and we say my monthly revenue goal is 10,000. If I can get a revenue or income of 10,000 each and every month for 12 months, then at the end of the 12 months, I would have achieved my revenue goal of 120,000. And we say, what is your monthly profit goal, right? How many clients do I need to achieve or target or win over? Because it's one thing to pursue 10 clients, but you need to know if 10 clients is what you need to secure or 10 clients is what you need to target, right? So how many clients do you need to achieve the above goals that you've set for yourself, and what are the expense ceilings that are necessary to achieve these goals? So all these things are a package because your monthly revenue must be when you take your monthly revenue and you deduct your expenses, you get your profit, right? So maybe it's actually better to work from the bottom upwards to say, how much profit do I need? Therefore, how much revenue, how much expenses do I have on a monthly basis? Therefore, if I take what amount of revenue do I need? Because when I take the revenue minus the expenses, I must get to this profit that I want. So, how much revenue must I be making to get this profit that I want? And to get that revenue that I want to, or that I need to get that profit, how many clients should I be able to achieve on a monthly basis, able to secure on a monthly basis for me to achieve all these goals? So you are breaking down the big goal into a smaller goal. And remember your owner's salary. Your salary as the owner of the business falls within the expenses, right? It's an expense for the business. So it falls within the expense ceiling where you need to define what's the maximum amount of monthly expenses that the business can realistically afford in order to achieve the revenue and the profit goal that I've set for the business. We are now going to look at how you can create an actionable plan for yourself, right? So this is now the practicality of day-to-day activities or weekly activities or monthly activities, depending on how you have defined the necessity of these things that will help you work towards these goals. You can even define it as the small daily habits or weekly habits that are going to help you achieve those goals, an actionable plan. Firstly, we look at how will you get the new clients to reach the revenue target. So we've already said in order for you to reach your revenue targets, it means you need to have a certain number of clients that you are looking at. Whether you're selling something or you're providing a service, you are selling to someone, you are providing a service to someone, and you need to have some kind of a number to say, these are the amount of people that I need to sell my product to. These are the amount of people that I need to provide a service to. And this is how many people I need to sell this product to, or this is how many people I need to provide this service to in order for me to reach the revenue target. But now you've defined that in the previous step. And now we are saying, how will you get these new clients? Out of the 10 people that you're going to contact, how will you be able to secure the five that you need to secure every month in order to achieve your goal? Right. So these are the day-to-day strategies that you are coming up with to say what works, what does not work, what has worked for me in the past, what has helped me reach my target market. Have I been able to get more clients from TikTok, from creating TikTok videos? Have I been able to get more clients from cold calling? Have I been able to get more clients from sending emails? Have I been able to get more clients from sending PR packages to certain people? What is it that helps you secure new clients? What are the day-to-day strategies and activities that you will be doing in order for you to get yourself the number of clients that you need to secure every month to achieve your goal? And then we look at separating your business and personal finances or account, right? We spoke about how this is one of the things that ruins business finances or cause you to struggle in your business finances. And you need to be intentional about separating these two accounts. In the previous step, we spoke about an owner's salary. And this is one of the actionable items that we do to ensure that your business and personal accounts do not mix. If they're currently going off one account, they need to be separated. All the business debit orders must go out of the business. All the personal debit orders must go out of the personal. The two need to be kept separate. And then you need a dedicated tax savings account, right? The reason I say this is many businesses are provisional taxpayers. In fact, every business is a provisional taxpayer. And I what the ideal structure you need to have is you need to be saving up for your provisional tax, which is due every 6 months. So every 6 months, you know your provisional tax return is due, and you need to be saving up for that so that by the time your accountant or your tax practitioner submits that tax return for you and you need to pay, it's not a disaster, right? You are prepared for it. You have money waiting for it. It's not something that completely disrupts your cash flow. So if you are VAT registered, you know that the income that is coming into your account on a monthly basis, 15% of that is going to SARS. It's not yours. It belongs to SARS. You need to pay it over. You are collecting that 15% on behalf of SARS, right? So ideally, you don't want to be in a position where you are spending that 15% that is not your money. Technically, it's not your money. You should not be spending it. So if you have a dedicated savings account, then immediately at the end of the month, when you calculate, okay, of the 15,000 revenue that I generated this month, how much is 15% of that? I know 15% of that is supposed to go to SARS. Let me transfer that portion into the savings account. At the time when it's due, it will be paid over to SARS. When your returns get submitted, again, it is not a disaster. You have those provisions in the savings account and you are able to settle that debt and not accumulate interest and penalties. Monthly bookkeeping. So this speaks to being able to track your business performance in real time. Bookkeeping is basically when we take your bank statement and we say, okay, for the month of March, you had 15 clients pay these amounts. We consolidate that and get the total. We say you had this expense, you had bank charges, you paid Microsoft, you bought a new laptop, you did this, you did this. We consolidate all those expenses, get the totals, and say revenue minus your expenses. This is your profit for the month. It's like you get a it's basically like doing an income statement, but on a monthly basis. So you get to know how your business is performing every month. Um, and you are able to reflect well on the performance of your business. As I mentioned earlier, to be able to make better decisions, know what is working, know what you need to take away from what you're currently doing. If there's any need for improvement, you can be able to implement those changes on time. Being aware of how much keeps the business running. So every business has monthly expenses that keep the business running. Even if your business just has bank charges for your bank account of 50 Rand, that is the expense that keeps your business running. So every business owner needs to be aware of how much in terms of expenses keep the business running. So it's very important to be aware of those expenses. Have a spreadsheet, a Word document, something, note it down somewhere to say, these are the, I am 100% sure that every month these expenses go off. And without paying these expenses, my business cannot run. So you have those. For my business, I know I have the website that keeps the business running. I have monthly expenses to keep the website up and running. I have a Microsoft subscription to keep the business running. I felt it's better to have a monthly expense instead of a once-off transaction on 1 month, because then it's too much of a big expense on the monthly income statement. But this is just my accountant brain doing its things, right? So you don't have to follow my advice. But for me, I have the website expense, I have the Microsoft expense, I have a Sage expense because that's where I do my clients' bookkeepings on a monthly basis. So these are the expenses that I know every month I need to make sure that I've generated enough income to cover these expenses because they keep my business running. You need to create a deadline calendar for yourself. You need to know when is CIPC due, when is SARS due. And again, this goes back to making sure that your dedicated tax savings account is ready on time, right? These expenses are things that should not catch you off guard. You should be aware that they are up and coming. You should be able to see that, okay, in 2 months' time, my CIPC returns will be due. In 2 months' time, my SARS returns will be due, and I will have to pop out money. So you are not stressed about it. You are better prepared for it because you know when it is coming. Now let's look at the monthly reflection meeting with yourself. So this is just something that you need to do to keep yourself in check, right? So think about it as when you are employed in corporate and you have monthly meetings with your boss where they're just checking what's your progress with that project. Are we coming along all right? Is there anything I need to be aware of? Do we have a crisis? Is there anything we need to fix? What's going okay? So you will have to have this meeting with yourself every month to keep yourself in check and just see that things are going accordingly. So the reflection points that I have here is your revenue target goals, right? Actual revenue versus target revenue. How much revenue did you actually generate in the month of March versus how much did you aim to achieve in terms of revenue for the month of March? So let's say you made a revenue of 8,000 Rand, but you actually wanted to achieve 10,000 Rand. Then you have a 2,000 Rand deficit, and you need to be able to reflect on what could be the reason why I didn't reach that 10,000 Rand target that I set for myself, right? Could it be because I did not pursue enough clients? Could it be because For half of the month, my laptop was not working, it was in repairs, and I couldn't send out the emails that I usually send out. You know what you do in your business. Remember, there's that day-to-day strategy that we spoke about back then. So this is where now you keep yourself in check to say, are those things working for you? You put in place a system and processes for your business to help you achieve the clients that you need to achieve the revenue and profit that you want to achieve. Are those things working for you? Do they need to be changed? So these are just some reflections that you do. You review your expenses to say, the expense ceiling, if there's someone who doesn't understand what I mean by that, is the maximum expenses that you can have. So in corporate, they would usually tell you about a budget. You guys tell your team leader or your manager that we would like to go out for lunch. When are you guys taking us out for lunch? And they're like, "Oh, the budget does not allow." It's because they have a profit that they're trying to achieve at the end of the financial year, and they have set a maximum budget for those team lunches. And it's only been 3 months in the financial year, and you guys are halfway through your budget. They cannot afford to squeeze in another lunch. So you also need to have those expense ceilings, your budgeted expenses that you don't go over. So on a monthly basis, you want to review your expenses and say, I had an expense ceiling of 1,000 Rand for each month. This month, I spent 900 Rand, which means I did well in terms of my expenses, but I just need to be careful because it could easily go over 1,000 Rand. It's quite close to 1,000 Rand, right? Or you say, I had an expense ceiling of 1,000 Rand, but I spent 1,200 Rand. What was the reason that I went over my expense budget? Was it something that could not be avoided, or is it something that I could have avoided so that you are able to do better in the next month? Your actual profit versus target profit, it's the same as the revenue to say, this is the profit that I actually made in this month versus the target profit that I aimed to make in the month. Did you do well? Did you do not so well? What could be the reason that you achieved that? Knowing the reason is very important because you can only change what you are aware of, right? Cash available versus expenses due. This is you looking at your cash flow to say, remember in the previous slide, I said you need to be aware of your monthly expenses that keep the business running. So you need to be able to look at your bank account and say, I have 3,000 Rand in my bank account, and I know my monthly debit orders are 2,000 Rand, which means my expenses are covered. But if income does not come in on time for the next month end, then I will be short, right? So being aware of these things of your cash flow and your expenses, it helps you be able to plan better, know when to work hard, know when you are financially secure in the business, know what you need to focus on, and so forth. You need to be aware of your tax savings to make sure that you are on track with your savings alongside with your calendar. You look at your tax savings account, you look at when the next return is due, and you have probably calculated an estimate with your accountant or tax practitioner of how much you will need for that tax return, and you have a set target in mind. So every month you ideally want to reflect on that and say, okay, I know that I need to have tax savings of 10,000 Rand by the end of June. It's now March and I only have 3,000 Rand. So I'm gonna need to really focus on the tax savings and reduce some of the expenses in the business so that more money can go towards your savings. So this is why reflection is important. It helps you figure out where you need to focus a bit more on, where you need to reduce so that you have more money for something else, where you need to improve, and also where you are doing well. It's a reflection is not always about the bad things that are happening in your business. It's also to know the good things that are happening in your business so that you know these are the things that I'm doing well and I need to keep them up. I don't need to change these things because they keep my business going and um, they help my business to be successful. The mistakes that you need to avoid: overhiring too early. So when you start a small business, we often get overwhelmed. I know I get overwhelmed by all the moving parts of the business that I need to look at. There's only one of me. I need to do the marketing. I need to do the actual work. When people want the tax returns to be done, I need to look at that. I need to focus on the admin of my own business, the planning, the goal setting, all these things. And as another business owner, I'm sure you can relate with some of that stress. And sometimes we feel we need a pair of hands. But the truth is, you find that your business does not even afford to pay you, and therefore it does not afford to pay someone else, right? So you just need to find other strategies to manage everything that you need to take care of and not overhire too early. Or if you do afford to hire someone, you need to make sure that the expense that is being covered in terms of those people's salaries or wages, you are hiring the number of people that the business actually affords, and you are not overhiring. The second one is paying for tools not used. So I have a personal experience with this one. Yesterday, if not the day before, I sent a WhatsApp message to this lady who owns this other software that I was using. I was not even using it. I was just registered for it, and I thought it could be something that is very useful in my company. But I realized that every month I'm spending about 330 Rand on this thing, and I am currently not using it because I am not that overwhelmed. But I think the main thing is I have not had time to figure out that software. So I've been paying for it for maybe 4 or 5 months, and I still haven't actually attended the training to know how to use it. So it means I was paying for a tool that I'm not using. So I sent a message and I said, hey, I need to cancel this debit order for my business because I just need time to actually build more client, a bigger client portfolio, because I think it's more useful when I have a certain number of clients and above. But also, I have not given myself time to figure this thing out. So I think for now, because I seem to not be able to make the time to figure this thing out, for now, I'm going to let it go. And then once the business grows a bit more, I will come back to it. And she said, no problem. So these are some of the reflections that you need to make to say all these expenses that I have on my business. Are these things that I actually need at this stage of my business? Sometimes you can be aware of something that can come in handy for your business, but you find that at this stage of your business, it's something that you can do without. You can always have it later. Another thing is underpricing. So you don't want to find yourself underpricing or giving too much discounts to just in order to secure clients. You need to know, if you're providing a service, how much time does the service actually take to how much time does the task that you are servicing to the client take, right? And how much should you be pricing for that time? So if it takes you the whole day to do something and you are making the client pay 200 Rand for it, then you spend a whole day performing a task that you only receive 200 Rand for. It does not make sense, right? You could have maybe charged 200 Rand for something that takes you 20 minutes, and in an hour, you can make 1,000 Rand, right? So these are you can make 600 Rand, I mean, in an hour. So these are some things that you need to look at. Yes, you have a specific target market in mind, and you take into consideration their affordability, but you also take into consideration how practical some things are for you in terms of your pricing. And the discounting to secure clients does not work because ultimately your clients look at you also as the business that does not really know. They lose some respect for your business. I know if someone is too cheap, I'm a bit skeptical to give them a chance, because I'm like, everyone is priced at 900 Rand. Why are you charging me 200 Rand? Something is wrong, right? Pricing without considering tax. So this is something that people who are VAT registered mainly mainly struggle with. But also, I think just in terms of your income tax and provisional tax, it's something that you need to take into consideration when setting your prices, right? You need to make sure that whatever income that you are generating from how you've priced your items or your service that you're providing, how that income is going to cover the tax expense of the business. So, this is something that you need to consider when setting the prices for your business. Personal reflection and awareness. So, at the beginning of the session, you will remember there's a part that spoke about your emotional health and psychology, the emotional and psychology reasons that possibly contribute towards you struggling financially in your business, right? So, this is the part that I said I will touch more on it. So, I think a lot of times there's how you handle your personal finances will most likely be how you handle your business finances, right? So if you look at your personal finances versus your business finances, in most cases you will find there's a pattern. If you're struggling to save in your personal finances, you will struggle to save in your business finances. Suddenly owning a business does not get rid of all those habits and all those things linked to the financial decisions that you make, right? So, number one, you need to be aware of your habits because you can only change something that you're aware of. So, you need to be aware of your habits. You need to know what are the things that tempt you to overspend financially, right? Personal financial habits influence business. This is what I mentioned that if you are struggling to save and invest in your personal finances, you will most likely struggle to save and invest in your business finances. Um, Linking emotions to financial decisions. So this is a big one that people often overlook, and it takes a lot of reflection and honesty to be aware of this and accept it, right? So a lot of people struggle from emotional spending, right? You find that when you're feeling sad or when you're feeling angry or when you're feeling disappointed, when you're feeling all these negative feelings, you tend to overspend, right? Or you find it's the opposite. When you're too happy, you tend to overspend. So, in your monthly reflection, you'll see in the value pack that I have provided for you, that I have designed for you, that I'm going to be sending out in the next few days. There's an A4 page there where it links the financial decisions that you've made to your emotions. To say, when you do your monthly reflection and you see that there's a week where your spending was just off track, right? Or you were not securing as many clients as you needed to, right? Is there an emotion that you can link that decision to? What was happening when that was happening? When you were overspending, that day or that week where you were overspending, what happened in terms of your emotions that possibly triggered the financial decision? Or even when you can't link the two, just check if you were feeling sad when you mistakenly bought that pair of shoes that that you did not budget for, right? So this is what we speak of when we say your triggers, right? We call them triggers. These are things that will constantly set you back, and when you are aware of them you can work on them and you can notice them when they happen. So I know for me, I'm an emotional spender. If I'm feeling a bit sad, disappointed, depressed, I want to spend money, and this is something that I've become aware of. And now that I'm aware of it, I can call myself out when I'm about to do it. So I'll go on Superbalist and shop around and say, let me check this out. And right as I'm about to pay, I'll call myself out and say, you're doing it again. And this is something that can only happen in your brain when you are aware of it, because then you can remind yourself why it's happening. So this is a personal reflection and awareness. It's something that has to do with you as a person and being aware of some of the habits and triggers that you have that could be impacting the finances of your business or the financial health of your business. And once you get that right within yourself and within your personal finances, you will see even the business finances becoming a bit more better than before. That is the end of the webinar. Thank you so much for joining in and listening to till this far. You are welcome to ask any questions that you have. That is my business banner and my contact details. You're welcome to take a screenshot, take a picture in case you need it a bit later. I'm gonna remove it just now so that I can enable the option where you are able to unmute yourself and ask a question, and I can have a look at the chat. Okay, if anyone has a question, you're welcome to unmute yourself.